that degree is coming to an end. We've seen now interest rates being increased in the United States, talk of it in Europe, we've seen it in Canada. And we've also seen talk of them letting some of the assets come off the balance sheet of the Fed and bringing that back down to a more conservative number. If that happens, interest rates could go up, and then that will start affecting the earnings because the debt that they're holding will have to be refinanced probably at higher interest rates. So they'll have this headwind now of trying to keep earnings up when they're paying more interest on their debt. So going on to the technicals of this, again, I have been wronged. This has been going on for a while, and you never know how long it will go on before it adjusts. But if we look quickly here, get back to Domino's. You can see this is starting to, might not be too clear here, but on some of these we're starting to see a head and shoulders pattern kind of forming. It's a pretty common technical pattern that's been around forever, and it seems to, even though it's been around forever, it seems to continue to work sometimes. That's basically just as it says. We have a shoulder here, we have a head here, and we have a shoulder on this side here. The thing is, you want a break through the neckline for this to be even valid, because you don't know what's going to happen here. It could just continue to go up and down and not be a head and shoulders pattern. So if you draw the neckline through the bottom here, you can see roughly at 179. If we saw a drop below that, it might say, okay, this is a valid formation that's going to happen. Once you get a break through that, a lot of times you will have a retracement back up, and then it might go down again. The measuring tool for that is typically from that baseline up to your head and then down here, which would give you about a 135 on the price, which is currently trading at 212. But with this being dynamics being unusual, and maybe people start focusing back on the book value or the overvaluation, I think it could possibly trade quite below that. You know, we could see maybe $70 or $80. It's hard to say. My short position is about 160 average, so it's it would have to drop quite a bit even for me to break even right now. But if it does develop, I can add to this short position and bring that average price up. I have been doing on top for income bull call spreads. You can see here one was quite close. That goes up to December, but it's a way of just generating some income. I won't go into the details, but you're basically betting though that come expiration on these, the price will be below what you did the spreads at. So in this case 200 for me and 210 for the one above. Which, again, I see that as being a little bit safer of a play. You know exactly what your maximum loss is. If I really felt strongly, I could say, why don't I buy a long put and down in here, and then maybe the 170 or something like that. The problem is, again, this has been going on for 2 years. The longer you go out for a put, the more expensive it will be. And if you go a shorter duration, there's a good chance that the price will not fall through your strike. So you end up losing money. So it's difficult, again, it's getting the timing right, which is difficult to do. And then when it actually does start to fall, it's still kind of difficult because the volatility which drives the premium price will increase quite a bit. So now you'll be paying a lot to buy a long put position. So it's kind of tricky. So I kind of like this. I think, well, you know, here's the head that's kind of the odds of it maybe going up to 220 is becoming less and less. And if this becomes kind of a bit of a clear breakdown, then I can just kind of ladder these down. They expire, you know, say expires October, another one expires in November, December. And the key really is to do quite a few of those. You're keeping the risk about the same, and you know, hopefully you can be right 90% of the time. Which sounds good, but you got to be a little bit careful, because one bad spread will take away about 4 good spread trades. So you do have to be kind of consistently quite accurate on the price placement. Again, we can go to Papa John's. We're seeing a bit of the same here. I'm actually making a bit of money on Papa John's now. Again, another shoulder head shoulder pattern. I've done all these bull call spreads up at 90, 90, 90, and they look pretty safe, expiring in October, January. I actually did an outright short put, not a spread, at 75 here, and questionable where that will work out, but it's looking not too bad right now. Again, we can see the measurement down here, down to maybe $61 if this was to come out. Again, if we look at the long term, it's starting to show up a little bit on the longer charts that some of these are starting to roll over. It's really important to look at the different time frames. You know, go from a weekly chart, go from a daily chart to a weekly chart to a yearly chart, and you'll see, you'll get a better picture of what's happening. Typically, the longer the trend, the stronger the trend. Shorter duration, the more randomness there is. People use candlesticks and other patterns which can form over 3 days, and to me that it gets very random. If you couple that with a longer term trend, then it can give you more of a feeling that maybe it is starting to break down in the short term based on that. But I try to invest more on the longer term, and if you can get a long-term trend right, it typically is less stressful and usually more profitable. So that's, and then you go to Jack in the Box, we can see exact same pattern. It's funny, these companies are kind of doing the same thing, and they're kind of reacting in the same way. Again, we got the shoulder here, we have a head there, we have a shoulder there. Not bad symmetry. This didn't really kind of work. There's the neckline. We had that kind of retracement. It came back and then it went right back up again. But it is rolling over here. It's roughly at my average price. And again, I've done a bull call spread up above. If that breakdown continues, I'll keep layering those on. That one expires in December. And if things really do look like they're going to break down or something, I might actually go to a long put position, but I don't have too much luck in that. I'll probably stick with the bull call spreads and actual short positions. You can also see, it's always nice to know what the smart money is doing in the market, and that does show up in your options and institutional. So what I've been doing here, this is just doing screenshots. On my left here is Interactive Brokers, and just looking. Okay, so what's the open interest on the puts? Is it increasing? So as this open interest increases, it's people that are betting that well, the stock's going to fall down. I'm probably correct. There's a bit of a trend happening here. For example, this was a few months back, and we had like 120 contracts at 150, which is quite below the price. And that increased to 662. as today I just took that off. So we're seeing the number of options opening at prices quite low. These are just a bit of a gamble, but if you get it right, you can make a phenomenal amount of money, of course, because the bid right now is like 40 cents. One contract is 100 shares, so that'd be like $40. And if that, say, dropped down, $40 to say 115, you get about 1,000-fold increase on that. It is tempting, but again, probably 90% of these will not work. But it's just interesting to see some of maybe the bigger or smarter money is starting to think maybe it's worth, buying a few put options. Another thing that I kind of been looking at a little bit is the ownership. And this is like your general ETFs that most people would buy versus the institutions, like Vanguard, which is the biggest ETF fund. It has the ETFs that the common investor goes out and buys, but they also have their own money that they invest from the revenues they get from providing those services. And it's always interesting to see what they're doing, and we're starting to see some of these, like the Tiger Technology Management, sold 900,000, Capital sold 9, and overall the top holdings now close to 1 million here. So you're starting to see some of the institutional money maybe pulling out of these. This data is a little bit delayed. Most of this is showing for June, so I just, again, I get this from Morningstar. We are starting to see sometime a little bit more insider trading, the executives, which have made out like bandits, of course, on this, because they've, on something like Domino's, they might have got stock options a couple of years ago for $50, and maybe they have to vest for a couple of years before they can exercise the options. But if the stock's say 150, that means that's gone up 300%. They exercise the option for 50, and receive shares at 150, make $100 profit. And this is sometimes in the thousands of shares, in the millions, where it really is probably more than their wages. And